The local index set for a good start to the week with green screens from Japan and Hong Kong to mainland China. The JSE had its best day in a month on Friday after tracking markets worldwide that firmed after the European Central Bank raised interest rates by 75 basis points. Rella Suskin is Head of Research at Benguela Global Fund Managers, joining us now to give us a sense of how the JSE is shaping up in early trade. Rella, good morning to you. How have the markets opened this morning after that rally on Friday?
Morning. Yeah, the rally has continued into today, and we see it across the world, including the JSE. The JSE is up almost 1% this morning now. And it's really across all sectors, although the resources sector certainly leading those gains.
Let's talk company news. Brait publishing its voluntary trading update. How are their numbers looking?
Yeah, so they didn't publish exactly any numbers, but they did give us a sense of how all their divisions are looking. Certainly on balance, it looks quite positive. Starting with their premier business, which is their food business that operates in South Africa. They have multiple food FMCG brands. They said they're seeing much improved performance since last year with their revenue and EBITDA ahead of budget. And they've been able to pass through all cost increases onto consumers, which is surprisingly strong given the results we've seen from some of the other food producers. I think investors there are really waiting on the news of a possible listing of that business separately. Their Virgin Active business, so that's both SA and globally, they continue to come out of that tough COVID operating environment. In SA, they are seeing membership numbers above 2019 levels, which are positive, but they do warn that with consumer disposable income coming under pressure, their outlook is slightly weaker. And then lastly, New Look, which is their fashion business in the UK, certainly an improvement, but still struggling, and they're really relying on their shift to online to pull them out of this difficult position.
Yeah, let's talk about the manufacturers' confidence, which has dipped in Q3, according to the latest APSA manufacturing survey. Give us the sense of what the talk is there around that particular survey.
Yeah, so the overall number is quite weak. It dipped 2 points to 26 for the third quarter. The key concerns really from manufacturers is the continuous load shedding that weighs on productivity. They're seeing just general demand across the market dipping as consumer disposable income comes under pressure with high inflation, increasing interest rates, and also a pullback in borrowing from financial institutions. On the positive side, they are seeing price increases across different commodities sort of easing. So they do see that starting to come through into lighter working capital going forward, which will provide some easing.
Let's conclude with the mining production and sales data for the month of July, which comes out tomorrow. From Stats SA, what do you anticipate that data will tell us about the state of health of the South African economy?
Yeah, so as we know, the mining sector has really been one of the leaders in the SA economy, really driving our growth over the last year. But I think the markets, as well as myself, very much expects another month of decline in mining production. And I think looking at commodity prices as well, we are seeing softer commodity prices both month on month, with kind of only coal being the only commodity in our basket that is exported, seeing a slight increase. If we're looking year on year at commodity prices, again, our primary export commodities like your gold, palladium, platinum are softer year on year, with coal really being the leader of the basket, still up close to 200% year on year.
Rella Suskin, thank you very much for that markets update. She is Head of Research at Benguela Global Fund Managers. Let's pick up on this.